What if I told you the stock market just flashed a signal that's warned of nearly every major downturn in the last 2 decades? A signal that fooled traders with a sudden rally, right before the market dropped like a rock. It's happening again. Most people will miss it. But if you stick around, you'll understand why this could be the calm before the storm, and what it means for your portfolio. They say markets are forward-looking, but sometimes the clues to the future are buried in the patterns of the past. Right now, there's a pattern flashing on the charts that many seasoned investors don't ignore. It's called the death cross. And no, that's not some dramatic media term. It's a very real technical signal that's historically marked major turning points in markets. So what exactly is the death cross? It happens when the average price of the market over the last 50 days drops below the average price over the last 200 days. And by average price, I mean this. Imagine you wrote down the price of something, like the S&P 500, every single day. Then you add up the last 50 days of prices and divide by 50. That gives you the 50-day average price. It's like saying, on average, how much did it cost over the past 50 days? Now do the same for 200 days. That's called the 200-day moving average, a much longer view. Think of it like this. If someone's performance starts slipping in the last couple of months, even though they were doing well before, it's a sign that something might be wrong. In the stock market, this shift often warns that bigger problems could be coming. So when the 50-day moving average falls below the 200-day moving average, it means prices have been going down lately compared to how they were doing before. It's a sign that the market's recent health is getting worse, and that can be a warning that bigger problems might be ahead. And here's the thing. This exact pattern is flashing red again on the S&P 500. Now, let's rewind the tape. The last time we saw this setup was back in 2022. The S&P had just formed a death cross. What happened next? Did the market crash right away? Not quite. In fact, what followed was a big rally. A lot of traders got caught on the wrong side, thinking the worst was over. The market moved above both the 50 and 200-day moving averages, just enough to convince people the uptrend was back. But it was a trap. After the squeeze, the index reversed hard and lost around 20% over the next 6 months. It wasn't just a correction. It was a slow bleed, driven by weak fundamentals hiding beneath a surface of hope and liquidity. Fast forward to today, and we're seeing the same playbook setting up. Once again, we've got the death cross, and once again, sentiment is turning bullish despite deteriorating macro conditions. Consumer strength is weakening, liquidity from the Fed and Treasury is tightening, corporate earnings are not as rosy as headlines suggest, yet the market is trading like everything is fine. This is exactly the kind of setup where greed creeps back in. And that's the trap. Because death crosses don't always mean the market will crash overnight. But when they align with shaky fundamentals, rising credit risk, and stretch valuations, they often signal that the path of least resistance is lower. So here's the key question. Are we about to repeat the 2022 playbook? Will we see another short-term rally, only to get hit with a bigger drawdown once the market realizes the fundamentals don't justify these prices? Whatever happens next, it's critical to pay attention not just to price, but to context, to liquidity, to margin pressures, to debt rollover risks. These are the forces that shape market outcomes over quarters, not just days. Don't be fooled by short-term rallies that seem to defy gravity. If the foundation is cracked, the bounce doesn't last. And when that death cross appears, historically it's been less of a coincidence and more of a warning. Stay tuned as we track how this plays out. And remember, in a market driven by hope and fear, risk management isn't optional. It's survival. If you found this breakdown useful, hit like, subscribe, and turn on notifications. We'll continue to follow this trend closely and give you real-time insights into what matters and what doesn't as this market unfolds.